I'm currently down $2,500 on my initial investment of $13,000 into the first Bitcoin and Ethereum ETF, but I'm actually okay with it. Yo, what's good? My name's Kang, and in this video, we're going to be talking about the world's first Bitcoin and Ethereum ETF and how they've held up over the past year. Crypto was really hot in 2021. Bitcoin and Ethereum hit their all-time highs. The Staples Center got renamed to Crypto.com Arena, and Coinbase had an ad so popular in the Super Bowl that it crashed their own website. And in the middle of all of this, the first Bitcoin and Ethereum ETFs were released. Now, I've invested a little over $13,500 Canadian into these ETFs, and I've had them for about a year now. So I thought it'd be a great opportunity to talk about how they've done over this past year or so. But before we get into that, let's talk about what these Bitcoin and Ethereum ETFs are and why they're so special. By the way, in this video, I'm probably going to just be talking about Bitcoin, but the exact same thing can be applied to Ethereum as well. On February 18th, 2021, Purpose Investments released North America's first Bitcoin ETF, BTCC. BTCC aims to give investors exposure to Bitcoin by being able to buy, hold, and sell Bitcoin on the stock market. That means no exchanges and no wallets. The way that they do this is they pool their investors' money, they use that money to then buy Bitcoin and then take it off the exchange and put it into a cold wallet, which is run by Gemini. Now, when you want to sell some shares of your ETF, the corresponding dollar amount will be taken out of the cold wallet, put back onto the exchange, sold for dollars, and then transferred back into your bank account, or in this case, your brokerage account. Now, this is a pretty quick and dirty how it works, and if you want a more detailed explanation, you can watch this handsome guy's video right here where he goes over BTCC a little bit more in depth. So on February 18th, Purpose Investment dropped 3 ETFs. BTCC.U, which is in US dollars, BTCC.B, which is in Canadian dollars, and BTCC.TO, which is in Canadian dollars but hedged. I bought shares of BTCC.B, which is the Canadian dollars non-hedged. Now, it's the exact same story with the Ethereum ETF, but instead of Bitcoin, it's Ethereum, but you probably already figured that one out. So now that we can kind of understand the basics of how these ETFs work, let's go over why they're actually so good. Number one, they're very easy to use. Since these are ETFs, they can be bought and sold on the stock market just like any other ETF, which means that they're very easy for an investor to purchase. And if you're sitting right now saying to your screen, what is the point of this? It completely defeats the purpose of Bitcoin. Well, then you probably aren't the target market for this ETF. Let me put it this way. There are legitimately some boomers out there that cannot rotate PDFs, and they just want to add a 1% allocation to this internet coin that had a 30-second ad spot on the Super Bowl. The reality is some people don't want to learn about wallets, don't want to open an exchange, but just want some exposure to Bitcoin and Ethereum. These ETFs are great for that person. The second option as to why they're so good is tax sheltering. Since these are ETFs, they can be put in Canadian tax sheltered accounts like the TFSA or the RRSP. And with how Bitcoin swings and the huge volatility that it has, having a way to shelter some of those gains is a big win. But of course, there's always two sides to every coin. This ETF charges an MER of 1%, regardless of if the price goes up or if it goes down. Secondly, not your keys, not your Bitcoin, but that's a whole entire thing I don't want to get into right now. You also can't trade ETFs 24/7, and the price of the ETF can actually desync from the price of Bitcoin, which I'll talk about in a little bit. All right, so now that we've talked about what these ETFs are, how they work, what their pros and cons are, let's talk about how they performed over the past year. So over 2021, I periodically invested into both these ETFs. So for the Bitcoin ETF, I invested around $7,000, and for the Ethereum ETF, invested around $6,600. At the time of filming, my Bitcoin ETF is down around $1,000, which is a loss of 15%. And my Ethereum ETF is down around $1,400, which is around a 25% loss. Now, my ETFs being down aren't really that big of an issue to me. I'm a long-term investor, and the crypto market's been taking a bit of a beating, as we all know. What I'm really concerned about is how well these ETFs have tracked the performance of Bitcoin. Just like any other ETF, BTCC uses the index to track the price of the asset that is following. VFV, which is an ETF that tracks the S&P 500, uses an S&P 500 index in order to track its price. BTCC, which tracks the price of Bitcoin, uses a Bitcoin price index called XBX. So the ETF tries its best to mimic XBX, and XBX tries its best to mimic the price of Bitcoin. On top of that, there's price action on the ETF, and there's the whole entire US dollar, Canadian dollar hedge versus unhedged. As you can see, this kind of starts to get complicated. All of this adds up to the price of BTCC being desynced from the price of Bitcoin, and that was my biggest concern when investing in this ETF. If we go to the Purpose Investments website, we can see this chart where it basically compares the daily cumulative returns of BTCC.U and the daily cumulative returns of XBX. The difference between these two graphs would be the premium or the discount that you're paying for the ETF. And premium basically just means you're paying more than the asset is worth, and a discount, it means you're paying less than what the asset is worth. This graph might be a little bit hard to see, but if we look closely, we can see that BTCC has done a pretty good job of keeping up with the index on a daily basis. Of course, there are some fluctuations here or there where you're paying a bigger premium, but for the most part, I'd say it's pretty good. Another way to visualize this data is by using a site like YCharts. So if we look here, we can see that BTCC is trading at a premium or discount through if it's above or below this line. Over the year, there have been some pretty big premiums, and there's also been some pretty big discounts. If we look on the site, it actually tells us on average that BTCC is trading at a premium of 0.07%, which is pretty good. One thing that I do want to note is that if you're looking at BTCC down to the minute or down to the second or even the hour, it's probably going to have a lot more swings in the premium and the discounts. Now, if you're a long-term investor, you probably don't care about this, but if you're looking at like a minute or an hour or even daily basis, you again probably aren't the target market for this ETF. All right, so now let's take a look at the Ethereum ETF. So the same deal here as the Bitcoin ETF. It uses ETFs to track the price of Ethereum. Looking again at Purpose Investments website, we can see that it's pretty good. No real major outliers here or there. Taking a look at YCharts, we can see that the average premium is 0.09%, which again is not bad. The graph does look like it has more swings on a daily basis though, so that is definitely something to consider. And I want to show you one more graph, and I promise this is the last one. This is the premium discount graph for ETH. ETH is a trust and is very different than an ETF. I won't go into the details and the nitty gritty, but basically how ETH is set up, they can't really add more Ethereum or liquidity to their stockpile, which means the price does all sorts of crazy things due to demand. On top of that, they have an MER of 2.5%, and if you look here, the average premium over the last 5 years is 517%, which is absolutely nuts. On top of that, they don't even track the price of Bitcoin and Ethereum at all. Now, the reason that I showed you ETH is to drive home why these ETFs like BTCC or ETHH are so special. Since they can issue shares on the fly, they don't really have an issue with liquidity, and since they're really heavily regulated, it means that they can track the price of Ethereum or Bitcoin very well. On top of that, these ETFs can be put into tax sheltered accounts, which is a big win for crypto investors in my opinion. Closed-end funds or trusts like ETH are the only options that US investors have, which frankly kind of sucks. That's why there's been so many attempts to get a spot ETF in the US, which would be very similar to BTCC, but they keep on getting shut down by the SEC. So the next logical question is, should you care about these ETFs and should you be investing with them? If you want to get some exposure to Bitcoin and Ethereum and you don't want to open up a new exchange, then BTCC and ETH could be a great option if it's within your risk profile. Ease of use of these ETFs and the tax sheltering makes BTCC and ETH very enticing to a lot of investors. But on the other hand, with all these new crypto apps that are coming out like Crypto.com, Gemini, Coinbase, or even Newton, it has never been easier to buy crypto. Personally, I really like these ETFs, and I think if you're investing for the long term, the short-term price actions and the discounts and premiums shouldn't really matter too much. Now, just to be completely transparent, I may have to end up selling my investment for some tax reasons since I moved to the US, but if I were living in Canada, I would definitely park these in my TFSA or my RSP to take advantage of those tax-free gains. But let's say that you're already into crypto and you don't really want to shelter any of your gains, I still think that you should be caring about these ETFs. Like I said before, this is a Canadian ETF. And since its inception, it's grown to $1.7 billion of assets under management, which is around 30,000 Bitcoin, give or take. And considering the population size of Canada, I think this is a pretty sizable amount. Now imagine if a similar ETF came to the States. What kind of impact would that have on the price of Bitcoin or the price of Ethereum? I'd assume that these ETFs would do pretty good in the States and would drive up the price of Bitcoin and Ethereum due to the influx of new investors. And yeah, there's this whole entire discussion on if we want this quote unquote old money to be getting into Bitcoin, or if we want these centralized entities to be controlling large amounts of Bitcoins. But that's a completely different topic for a completely different video. And if you're long-term crypto investors, let me know your thoughts on this down in the comments because I'm really interested in hearing them. Overall though, after a year, I've been pretty happy with my investments into both of these ETFs. I've been able to hold them in my TFSA for at least a little bit, and they've tracked the price of Bitcoin and Ethereum pretty well. I'm pretty excited for if and when the US drops their own version of this ETF and for the crypto space in general. For now, I think that getting a small exposure into Bitcoin or Ethereum is a great idea if it meets your risk tolerance and is within your investment goals. But that really wasn't enough for me. I wanted to try something with big risk and potentially big reward. And to see if that same strategy worked for you, you can watch my video right here where I go over my investment plan for 2022.